Homeowners who receive a COVID hardship forbearance are not required to pay their skip payments in a lump sum once the forbearance ends.
This is Florida Talk Real Estate with Jim DePola. Call our team of experts now, 1-877-927-6969.
Mortgage forbearance, Paul. I wanted to read something that made my mouth drop, because this is coming from the Consumer Financial Protection Bureau, which I know that you're not always a big fan of in the long run of the history. I think that there's some benefit to it. You know, I feel like they do a lot of good things, but I also know that they're very overbearing on other things. But listen how they described your options once you get out of forbearance and you have to stop making the payments back. Listen to this paragraph. Homeowners who receive a COVID hardship forbearance are not required to pay their skip payments in a lump sum once the forbearance ends. Generally, there are a few different ways borrowers can make up their missed payments. Okay, here's the first example. Ask your servicer about what options are available to you. Option number one, a repayment plan might be right for you if you can afford to pay more than your regular mortgage payment for a few months until your missed payments have been made up.
Yeah.
Okay, now, Paul, you've done this, I'm not even joking, tens of thousands of times. Your company has calculated, okay, Jim, you missed 14 payments. You owe $28.03 a month, right? Now you owe this amount of money. We're going to do a loan. We're going to calculate a way that the loan mod will work for the bank, where the mortgage payment's not more than 31% of your gross income, blah, 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 blah. And you come up with the payment. If I had to make up 12 missed payments, okay, in a payment replan, and I had to make up 12 payments over time, and I was making my regular payment plus extra, how much, I mean, you might have to, you might have to pay more than your regular mortgage payment for a few months until your payments are missed. That's what it's saying.
Few months, like 5 years. Yeah.
Thank you very much. Right.
A few months. Yeah.
And you're not exaggerating about that. I mean, we're laughing, but that's not exaggeration, right?
Right. That's the numbers.
Well, because if it's just a few months, your payment's going to be like
astronomical.
10 times,
right?
Right. If it's just a few months. So, but at least if, as Paul states, 5 years, it might be somewhat affordable. I mean, unless you're already pressed to your limit.
Well, and then they go back and say to you, that's one option. Then the other option is you could. The other option is you could throw it on the back of the loan. The other option is you could throw part of it on the back of the loan and part of it gets repaid. Mm-hmm. So, you know, they're really saying they don't know what they're going to do yet. And I think it's all going to be what the banks are given by the federal government as incentives to throw it on the back of the loan.
Is it going to matter, do you think, who you get on the phone?
No, they'll have a process and they'll have an approval. The question is who's going to be analyzing the data from the borrower. And the other risk for borrowers, and Jim, you've seen this thousands of times, you get borrowers who send the bank information based on what they think the bank wants to hear.
That's exactly what I wanted to say to you, Paul. The biggest mistake, thank you. That's exactly where I wanted to go with this. The biggest mistake, I'm talking to the public right now, the biggest mistake you can make is, in my opinion, okay, unless the bank says to you in no flat out terms, we're taking all the payments, we're throwing it on the back end, no penalties, we're not reporting this to the credit bureaus. This is the way we're going to do it. Start making your regular payment again and you're up and running and you're okay with that. Unless you have that, if you're trying to turn in information to the bank to actually give you some type of program and you're doing it by yourself, that was one of the top 3 mistakes I saw during the crisis, where people said, oh, I don't want to bring in a professional. I'm just going to go to the bank and work it out myself with the bank. And the problem you don't understand is when you do that, is the bank has certain, like, because they had a federal guideline they needed to follow.
Right.
So they had certain mathematical equations that they knew that you didn't know that you had to meet in order to meet that program. If you're going in by yourself, the big mistake with the old people doing low mods way back in the day, they would turn in information that actually hurt their case to get the low mod.
Right.
So, Paul, could you explain that a little bit better than I did?
Yeah. So people were turning around and saying, I need to show this bank that I've got enough money now that I can that I can pay my mortgage, and I want them to give me a modification. So they'd show a bank statement that showed they had $45,000 sitting in their checking account, and they were $25,000 behind. And the bank would say, "Great, write us a check. I see you got the 45. There's no modification. Just pay us in full, and we're all set." And people would say, no, that's not my money. I have money in there for my mom. My mom puts her money in there and I pay her bills. I don't have that much money. And then they think you're lying and they say, too bad, we're not helping you. And then the other side of it is people turn around and do just the opposite. They're making $55,000 a year, but they only show one spouse's income because they think they have to show that they're being hurt by the pandemic, and well, I'm only making $28,000 now, and then the bank says, insufficient income. We're not giving you any benefits. You better sell your house. There's no way you can afford to stay there. So whichever way you go, you end up getting stuck with not meeting their in the box criteria, so to speak.
That's why you need to have the free consultation with the law office of Paul A. Krasker to make sure that you're doing the right thing for you and your family. You know, back in the old days when we had the Great Recession, people would miss their payments. And I know because I was one of them back a long time ago. Okay. And you would have many sleepless nights because you were worried, oh my God, am I going to lose my house? How am I going to make this money back to the bank? Is the bank going to work with me? And they'd worry. And then when we created this radio show, which actually started out for distressed homeowners, that's how we started the show in a way. We used to get the phone calls all the time afterwards. I just got off the phone with so-and-so from the law office of Paul A. Krasker. It'd be George or Paul or Fabian, or, there were so many people, and they would call up and they would say, wow, I feel so much better because I don't feel like I'm by myself. And also they learn so much. They're like, wow, I didn't know that. I didn't know that. I didn't know this. And there's all this stuff going on. And now they feel like they have a plan, that they have control of their life, that they feel better about their situation, that they know all the options, as Johnny mentioned earlier, all the options. You have to take advantage of this. Do not let the banks dictate what's going to happen to you after this COVID crisis. This is going to be the next thing for the people that are in trouble. And here's the big people that should really be thinking about this right now. If you're on a COVID or CARES Act non-payment plan and you're protected right now, and you know that even if they gave you 24 months as it stands, I've already burned up a year of it. And even if they did give me another 12 months, right now I'm totally unemployed and my industry is shut down and I don't know what I'm going to do for a job anytime in the near future. You don't wait for the CARES Act benefits to end to start talking to somebody. You need to talk to somebody now.
Yep. There's a reason why we've had Paul Baltrin on recently, why we've had George Miller on recently, why we have Paul Krasker here today. It's just to keep re-emphasizing every Saturday. Do not wait until the finish line is there to then step in and be like, well, what are my options? Be proactive. You're reactively working as well because you're in this situation, so you're reacting to the situation, but get proactive for what you know is coming. FloridaTalkRealEstate.com.
Yeah, it's interesting because Palm Beach County, Florida is faring much better than other places.
Mm-hmm.
Much better. You go to any restaurant in the last 6 months, it's full. I tried to get a reservation for tonight at 5 or 6 places, none available.
Did you use your name, Paul, or are you just calling it up as just Paul?
Yeah. Oh, it's you. No, we don't have any space. Yeah.
You can always drop Greek's name if you want. I mean, you know.
Okay,
You do that too. Yeah.
Yeah. It's better than if you go and then they spit in your food. So you'd rather
Yeah.
stay home.
Yeah.
So, there are a lot of people who lost their job in the hospitality industry, and many of them have regained their jobs and are still on the forbearance. For those people, I'd encourage them to get off the forbearance as quickly as you can.
Mm-hmm.
Period. Everybody's worried about a fourth wave or a third wave or whatever wave they're coming up with now. But they want to stay on the subsidy or on the forbearance. But the more you stay on there, the less likely it is that you find an acceptable solution at the end.
That's so true.
And the more likely it is that they're going to take into account your scenario and not treat you with the masses at the end of the thing. I mean, you remember we were telling people in 2008, talk to the bank, do the modification. In 2010, it took 6 months just because of the backlog of people who were in the process. In 2008, you could get people in and out in 3 or 4 months of working with a bank.
So we have very different markets versus our last real crisis in the real estate market. They're very different. They're propped up differently. They're set up differently. They're very different. But there's one common thread, Paul, and it's the banks. And the banks the last collapse, if the banks wanted to work with people and keep them in their homes, they could have, and they would have. This is a very different setup, but are we going to see, as you said, kind of like people all being thrown into the same bucket? Are we going to see the banks just go, we're sitting pretty here. We're not going to play ball with you people, especially those that determine they have some money or think they have money, and they're just going to hardball these people and really pinch them.
Well, and there's one more factor that I think you're getting towards right now, which is in 08 and 09, those banks were hurting.
Yes.
In 08 and 09, there was a real risk that those banks could fail.
Yep.
And
too big to fail, damn it.
Right. And so they got government handouts to be able to stay around, and there was a carrot and a stick tied to those handouts, which is you got to work with your borrowers to get everybody through this. Today, those banks are still making record profits.
Even in this crisis, they're making record profits.
Even in the crisis, they're still making big profits. And so those banks aren't in a position where they have to work with borrowers unless the government gives them an incentive to do it.
Right. Where's their incentive right now? What is the government incentive to help people with the CARES Act?
I don't know what was buried in the CARES Act that gives the banks an incentive to allow these forbearances to continue. Clearly, the banks must be getting something.
Well, I thought maybe I'm wrong about this because this is getting actually a little above my pay grade, but Paul's in these circles. So
yeah,
I thought that what's happening behind the scenes is that the Treasury is printing money basically to pay for the servicers. You know how the servicers have to pay the note holders no matter what, whether the payments are made or not. Yeah. I thought I don't remember the terminology for this, but the Fed is basically paying those servicer fees to the note holders.
I thought that the Fannie Mae, Freddie Mac, FHA, VA, USDA are all making the payments to the note holders with loans from the Fed. So
that's basically, yes, and I call that printing money, but yes,
okay.
loans.
So they're making loans, and the payments to the actual bondholders on Wall Street who hold these mortgages have been paid. But at some point, Fannie Mae, Freddie Mac, and FHA, and VA, and USDA have to repay those loans.
It's got to even out, yeah.
So that's the taxpayers, right? That's really the taxpayers.
So what is the deal that's going to happen Is it going to be that they never have to be repaid and they're hereby forgiven? Are they going to be able to give in lieu of repayment? They'll give tax credits to those entities that then hand it back out to the bondholders. I don't know how it's going to get resolved, but unless it's going to get resolved, somebody's holding this economic loss.
Yeah, it's hot potato right now.
And it's very murky. To me,
it's eventually going to be us.
Yep. Yeah, it sure is.
It's eventually going to be
there is no them.
How about the landlords? Are the landlords feeling safe? Should they be feeling safe right now?
Well, that's why I get so upset, where everybody else is getting a bailout from the government and eventually going to be increases in our taxes to protect them. But there's this class of people in the United States who are taking it on the chin and not getting any support from the government. And that's these landlords.
Yeah, basically they're banks, but they're not banks.
And it's landlords. Basically, everybody talks about it with the big REITs that own all these apartment buildings and et cetera, and they make it sound like it's some big corporate entity. Maybe even a majority of the people are
53%. I just talked about it last week, Paul. 53% of all the rental properties in the country are single-family homes or less than 4 units owned by mom and pops.
Okay, so you look at the Invitation Homes that bought up 7,000 homes in South Florida and probably bought another 3,000 now. They can afford to take it for a period of months. But somebody who worked their whole life and put money into their self-directed IRA and used that money to put 20% down on a single-family home for $300,000, and they've been renting it out for $2,800 a month, has a mortgage to pay, has taxes to pay, has insurance to pay, and they're depleting their personal savings or their IRA money to keep that property afloat.
Yeah.
And at the end of the day,
deferred maintenance on that property. Yeah.
Believe me, if that tenant didn't get the hot water heater fixed in 15 minutes, they're going to scream to the police and they're going to scream to the health department, and they're going to, but yet they're not making the payments, and the government's not letting that landlord evict them. So
that feels like the almost forgotten segment, but I know there's been help for them. It's just been so hard to find. FloridaTalkRealEstate.com. You can have access to Paul and his whole team, the law office of Paul A. Krasker, very valuable part of the Florida Talk Real Estate team. And it is a team together. One-stop real estate shop. It's FloridaTalkRealEstate.com. Great to have you with us on Facebook every Saturday. Now on YouTube live as well, Florida Talk Real Estate LLC. We're going to continue to give you lots of videos, chunk out very important information that we have on the show every Saturday. And of course, we'll continue to roll through every Saturday with 2 hours of infotainment. For Jim DePola, have a great weekend, my friend.
You too, Johnny. I'm going to be showing properties up in Stewart, and it'll be fun. Hopefully, it's a little overcast today, so I hope it doesn't rain.
Oh, well, yeah, put that out there like the secret. Good for you, Jim. Bring your umbrella now.
Thank you,
Paul
Johnny.
Krasker, have a great weekend. Man, it's really nice to see you. It feels like it's been too long. I hope you can maybe drop Jimmy D's name. You'll get your reservation at that restaurant.
Perfect.
Yeah.
Perfect.
Yeah, right.
Or Hot Ross. Hot Ross seems to work.
Hot
too.
Ross. That's the one.
Hot Ross would be the best.